On December 10, 2024, a noteworthy event transpired at Microsoft's annual shareholder meeting. A proposal was presented to the tech giant, urging it to consider an investment in Bitcoin. This proposal, put forth by the National Center for Public Policy Research, sought to explore Bitcoin's potential as a strategic asset. The NCPPR's proposition argued for Bitcoin's viability as a hedge against inflation and a tool for portfolio diversification. Michael Saylor, CEO of MicroStrategy, supported the proposal, citing Bitcoin's long-term growth potential. The proposal recommended allocating 1% of Microsoft's total assets to Bitcoin. Given Microsoft's $3 trillion valuation, this would be a significant investment. However, the proposal was met with resistance from Microsoft's leadership. The company's management and board of directors recommended that shareholders vote against the Bitcoin investment. This decision would be pivotal in shaping the outcome of the shareholder vote. Microsoft's management and board of directors presented a united front in their opposition to the Bitcoin proposal. They cited several key reasons for their stance, carefully outlining their concerns to shareholders. One primary concern revolved around Bitcoin's volatility. Microsoft's leadership expressed apprehension about exposing a portion of the company's assets to such price swings. Amy Hood, Microsoft's chief financial officer, emphasized the company's need for readily available funds. Bitcoin's relatively illiquid nature compared to traditional assets posed a potential challenge to Microsoft's financial flexibility. The board underscored its commitment to ethical considerations and responsible data sourcing. This focus on ethical operations was evident in the strong support received for a separate proposal on AI data sourcing accountability. The board revealed that Bitcoin and other cryptocurrencies were already on their radar. Their cautious stance reflected a desire to thoroughly assess the risks and potential implications before making any significant commitments. The shareholder vote, held on December 10, 2024, delivered a resounding message. Less than 1% of Microsoft's shareholders voted in favor of the Bitcoin proposal. This overwhelming rejection clearly indicated a lack of appetite for a significant Bitcoin investment among the company's investor base. The shareholders, by and large, seemed to align with the cautious stance adopted by Microsoft's leadership. Despite Bitcoin's growing mainstream acceptance and its impressive price surge past $100,000, major investors remained hesitant. Concerns about volatility, regulatory uncertainty, and the nascent nature of the cryptocurrency market continue to outweigh the potential rewards. The vote highlighted the difference in risk tolerance between individual and institutional investors. It underscored the need for clear regulatory frameworks and robust risk management strategies before cryptocurrencies could gain widespread acceptance within the corporate world. The Microsoft shareholder vote sent ripples through the financial world, prompting analysis from experts in finance and cryptocurrency. Many saw the decision as a trend among large corporations. These corporations acknowledged blockchain's potential, but were wary of cryptocurrency volatility and regulatory uncertainties. Analysts noted the conservatism of large corporations. Their decisions were guided by established models and a preference for predictability. The lack of clear regulations was a significant barrier. Despite caution, interest in blockchain was growing. Companies explored blockchain for supply chain and data security. This could lead to a more open-minded approach to cryptocurrencies. The Microsoft shareholder vote provided valuable insights into the evolving relationship between corporations and cryptocurrencies. While significant hurdles remained, the future landscape held both challenges and opportunities. The trajectory of this relationship would likely be shaped by market dynamics, technological advancements, and regulatory developments. One potential scenario involved continued caution from large corporations. If Bitcoin's price were to experience significant volatility, or if regulatory uncertainty persisted, these companies might maintain their distance. Alternatively, increased mainstream adoption of Bitcoin and greater regulatory clarity could encourage corporations to reconsider their stance. If Bitcoin were to gain wider acceptance as a legitimate asset class, and if clear regulatory frameworks were established, More companies might follow the lead of MicroStrategy and Tesla. The future landscape would also be influenced by the development of institutional-grade custody solutions and more sophisticated investment vehicles. As the infrastructure surrounding cryptocurrencies matured, it would likely become more appealing to institutional investors. The Microsoft shareholder vote provided a snapshot of the sentiment towards Bitcoin among large corporations. It highlighted the hurdles before Bitcoin could gain acceptance as a mainstream asset class. Microsoft's shareholders reflected concerns about volatility, regulatory uncertainty, and the nascent cryptocurrency market. However, this event must be viewed within a broader context. Finance is transforming rapidly, driven by technology and evolving investor preferences. Cryptocurrencies represent a shift in how we think about money and value. The Microsoft vote might signal a setback, but it also sparks further dialogue. The future of finance is unwritten, and the role of cryptocurrencies remains open.